In this presentation, we will take a look at some other major forms and resources related to QuickBooks Online. Here we are in the QuickBooks Online test drive of Craig's Design and Landscaping. You can find by searching in the Google search for QuickBooks Online test drive. We're going to go down to the desktop version once again to take a look at that flow chart. So I'm going to go over to the desktop version. We took a look at the flow chart for the vendor cycle, the customer cycle, the employees. Now we want to consider these other sections over here. And I'm just going to pick and choose some of the items that they put on the first page in these other sections, because these are going to be items obviously that they think are important enough, that are used enough, that we might want them on the first page, basically the home page of the QuickBooks desktop. So the first item we have is the chart of accounts. So that's going to be the account listing that we will be setting up. So let's take a look at that in the QuickBooks Online version. Where is the chart of accounts? I'm going to go back to QuickBooks Online. Now, the chart of account isn't actually a form. This is something that we've basically set up before we start entering the data. So that's going to be something that we typically will put in place before we start entering everything else. We're going to need the chart of accounts in order to apply all the forms to, so they have the accounts that will be affected. The accounts are basically what are going to be making up the financial statements. Now, oftentimes this will be put together partially for us as we first start the QuickBooks program, because they'll give us some default accounts typically. So I'm going to go to the accounting down below. We will set up the file from scratch as we started to do before, and go through what the chart of accounts are when we go through our practice problem. So I'm in the chart of accounts. I'm going to want to see the chart of accounts. So I'd like to see the chart of accounts here. And within the chart of accounts, we're going to have the account name, the account type, the detail, and then the balance, at least for the balance sheet items. So what we're going to need to understand with the chart of accounts is going to be, what type. The main thing we need to understand is the type of accounts over here. What are the type of accounts that are within the chart of accounts? And they're basically going to be in order. You can think of them in order of basically balance sheet accounts, and then income statement accounts, or profit and loss accounts. In other words, assets, then liabilities, then equity, and then the income statement accounts of income or revenue and expenses. And then you can think about it broken down into more detailed specific asset type of accounts, including a bank account, which is a specific type of asset. Now, this isn't the account name. The account name is the checking account, but the type is the thing that really is driving how the account, where the account will appear on the financial statement and how the account will act. Then we have the accounts receivable type of account, which is actually the same as the name. So we have an accounts receivable asset type of account. Then we have the other current asset type of account, which is an inventory account in this case. And then we got the prepaid expenses, other current asset, other current asset, other current asset, fixed asset type of account for the truck. And then we have the liability account of accounts payable, a credit card type of accounts for the MasterCard, and then the Visa, and so on and so forth. So as we get into the chart of accounts, and as we start posting things to the financial statements and looking at the financial statements, you'll be able to understand the chart of accounts a little bit more clearly. Many of these accounts, again, QuickBooks will kind of set up for us when we first start the system, when we first set up the accounts. But when we add accounts, the key point is we need to know where that account type is. Now, normally you will actually group the chart of accounts by the account type. You could search the chart of accounts by name and sort it by name by clicking here. But I think it's probably best to search it by account type. You want to basically look at the chart of accounts by account type. Now, the balance sheet accounts are up top. Balance sheet accounts will actually have the QuickBooks balances within them. The income statement accounts will not. Those are what are called temporary accounts. And the amounts that will be in the income statement accounts will depend on the time frame that we are talking about. Each of these accounts we can then run a register for, kind of like similar to a check register. So you'll see a report that'll have an increase and a decrease, similar to a check register you might see with when you have your bank account. So we'll take a look at this in a lot more detail when we actually go through our practice problem. Working through our practice problem, we'll build this from scratch and go from there. If we go back to the desktop version, we then have the items and services. Now, these are going to be found, I usually find them in the lists over here. So when you think of lists for QuickBooks, then there's specific things that are going to be in the lists. For example, the chart of accounts, you can be referred to as lists. Now, when you think about terminology for QuickBooks, remember, there's accounting terminology that you have to understand for financial accounting if you want to talk to basically people that are working in financial accounting, like auditors and stuff like that. And then there's QuickBooks terminology, which has a lot of overlap, obviously. But there's some terminology that's just QuickBooks. If you talk about lists within QuickBooks to someone who has learned mostly accounting within QuickBooks, then lists are going to have a specific meaning, typically being the chart of accounts, and then the items lists, which are going to be inventory items and service items. So let's take a look at those in QuickBooks Online. That's going to be another key component, not a form. That's not something we're going to put the data input. These are, again, kind of essential building blocks to set up the information so that we can then apply the forms and use the forms properly. So I'm going to go into sales here on the left-hand side. So we're going to go into the sales, and then I'm going to go into the product and services. So product and services. And here we have our list of information. Now this is going to be typically, the items here are going to be our services that we provide and inventory that we provide. And as you input this information in, you might have something say that like the pump that we had in a prior presentation, we've got the sales price for it and we have the cost for it. And this is where you're going to put that information in so that it'll populate in the invoice and the sales receipt. So this is something that's kind of behind the scenes that, again, if you're just doing the data input and the invoice and the sales receipt, then you won't know about these type of items. You only know about them when you set up the system. If you have a new kind of item you have to set up, but they're essential to the working of the data input, to make the data input into forms such as invoices and sales receipts very easy to do. These are really a crucial thing to understand within QuickBooks. We'll go over these and how to input these when we get into the processing of the reports. I'm going to duplicate this tab and just show you one more time that we've seen this before, but I'm going to go ahead and duplicate this tab and make an invoice just so you can see where these items are. So let's say we then came over to the invoice tab over here and we were make a new invoice, or if we went to new up top and we went back down and made an invoice, this is what us billing the client would increase the accounts receivable. You'll remember that we had these items down here and we chose the pump. So when I went down here and I chose this pump, it's pulling that information from the list. So it's pulling the rate from the list and it's pulling the name and everything from the list, but it's also pulling the cost of goods sold. When we said that cost of goods sold magically appeared, here's where you'd have to look to know what the cost of goods sold is and why it appeared in cost of goods sold and reduction of inventory as it did in our example problem in a prior presentation. Now I'm going to skip some of these items. I'm going to go down here to another major item. We saw the writing of the check. We saw that in a prior presentation in QuickBooks Online. They actually put that in the vendor section because, you know, it kind of fits within the vendor section, you would think, although you could write checks for other things as well. And then the other thing that's important is the register. Let's think about the register. And so I'm going to go back to QuickBooks Online and consider the register. Now, the way I would go into the register in QuickBooks Online is go back to our chart of accounts and think about the registers. So we discussed them a little bit up top. There's a different way to get into them in the desktop version, but here I think this is the easiest way to go. You could do it in a similar way in the desktop version as well. But in any case, notice that all the balance sheet accounts up top, you have this register. And when you get to the income statement accounts, then you run the report. That's because, once again, the balance sheet accounts are the permanent accounts, and you have a register for them. Now, the most familiar register will be for like the cash account, and that's the one if you use the register a lot, if you're someone that uses, if you're on more of a cash-basis system, then it may be easier to go directly to the register rather than entering checks and deposits using the forms. You can go directly to the register. And so if I go into the register and I was to open the register here, this should look kind of like the register that you would expect in your checking account. Like if you had a check and then you were tracking the register of the transactions for your check and basically your checkbook. That's what I'm looking for, the checkbook. Then you'd have basically a similar kind of register. And it's going to give the transactions here that would be happening. And then you've got either a payment or a deposit. In other words, it's either increasing or decreasing the register account. Typically checks would be decreasing, obviously, and then deposits would be increasing. And then it's going to have the running balance on the right-hand side. Running balance on the right-hand side. So I made it a little bit smaller with the holding down control and scrolling down so you can see the balance, running balance on the right-hand side. So this would be a typical kind of register. And you can actually enter transactions directly into the register. So if you're on more of a cash-basis system and you're just recording the information into the books so that you can make the financial statements, then, for example, instead of if you're looking at your bank statement, and you haven't entered the transactions and you want to enter them directly from the bank statement, you could go directly to the register, which would be similar to bank feeds. You're kind of relying on the bank to enter the transaction, and then enter that information directly into the register. As you do so, the system will still see it as a check. So if you entered something directly into the register and you called it a check, for example, then it'd still be a check. This one would still be a check type of form if you were to drill down on it on the financial statements. But it's quicker to enter into the register generally than to create another form for the check. So it's the same thing. It's just a little bit easier to typically enter it directly into the register. Same for the deposit. If you're going into your bank statement and you're trying to enter your deposits directly from the bank statement and on more of a cash basis system, and you're relying on the bank statement to record your deposits from your customers, it may be easier to go directly into the register and do that. And if you're using bank feeds in a similar fashion, then you'd be basically, assigning those deposits usually to customers to a deposit, and in a similar fashion in this way. So you can go directly. It might be easier then to go directly to the register to enter that information in. So again, if you actually enter deposits into the register, though, be careful, because you're kind of you're going on a cash basis and you're skipping some detail in the report. Meaning, if you don't first enter an invoice or a sales receipt and you only enter the deposit, then you don't have the detail of tracking the customer. All you know is that you got a deposit from a customer, right? So you have less detail there. But in any case, just note that you could enter information directly into the register. Now, we also want to look at registers for other accounts. Now, normally you would think about a register for the checking account, but you could have a register for any of these accounts. So in a situation, for example, where we don't have a form, like if I went up top and I don't have a form for something because it's not a normal transaction, such as if we purchased equipment and we financed it. So we purchased property, plant, and equipment, but we financed it. Well, then there's no normal form for that because we don't purchase large pieces of equipment all the time that we're going to capitalize. So there's no standard data input form that we would then use for that, and we could put a bill, but that would put it into accounts payable, and we want to put it into another loan. Well, in that case, you would usually use a journal entry, which you could do. You could do a journal entry, but you can use the register if you don't like debits and credits. If you're not used to debits and credits, you could still go into the register and say, well, I know, for example, the truck went up. In this case, if I go to the register for the truck because it's an asset account, I can enter something directly into the register, increasing and see how it's in an increase and decrease. I can increase the truck, and then the other side, I'd have to go create an account possibly to a loan or something like that. So you can use the registers to kind of think about in terms of increasing and decreasing instead of having to default to the normal default, which are debits and credits. And it could be easier in some ways. If there's only 2 accounts affected and one of them is a balance sheet account, then that could be a way to go. And we'll practice that. I'll show you that method and how it relates to journal entries as well. If you have more than 2 accounts that are affected, then you almost have to do a debit and credit journal entry. It's just easier. Otherwise, you're confused on which way the accounts are going and whatnot. So, and we'll run into those kind of problems, and I'll discuss them as we enter the data into our practice problem. Back to our QuickBooks desktop. The other thing that's going to be really, really important for any company to do is do the bank reconciliation. So no matter what you're doing, even if you're completely reliant on the banks, for example, if you're doing bank feeds, you're pretty much reliant on, you still want to reconcile, because the reconciliation is one of the major internal controls you have. The internal controls guarding against you making errors or not entering or entering things 2 times. So that's going to be something that every company really should do. If you don't do the bank reconciliations, you really don't have, as much assurity about your financials as you would like to have. So if we go back to QuickBooks Online and we go down to the accounting down below, you'll see that's where we got to the chart of accounts. The one underneath is going to be the reconcile. So that's going to be the reconciling process. So it's under accounting and then reconcile. And then I'm going to say get started. And the reconciliation would look something like this. You'd have the checking account here. This is going to be our bank account. We would have the beginning balance. And we're imagining we have our bank statement in front of us now. The bank statement would then have the beginning balance. It would have the ending balance here as well. And we'd have the date of the reconciliation. And then we would go forward and basically check off all the transactions that would happen. We'd basically just match up the bank reconciliation data that the bank is recording to our data. And remember, if we're doing all of our transactions separately in our books, like we're writing our own checks and whatnot, and then the bank is showing those clearing on the bank side, then we can basically tie out cash, and cash is part of just about every accounting cycle. So if we can have some secondary assurance outside of the system on the cash, then that's a double check on our system that is really, really huge. It's valuable. Now, if you're dependent on the bank, in other words, if you have the bank statement and you're taking that bank statement and entering all your data into the QuickBooks system directly from the bank statement, and you could do that with bank feeds. Again, you could say, I'm just going to take the bank information and enter that directly into the system. You still have to assign it out, as the expense account and whatnot. But that means that you're not entering the information yourself and then using the bank to double check it. You're completely reliant on the bank, right? So and that would be just like if you took the bank statement itself and you just took the bank statement and entered everything into your system. You're kind of on a cash basis because you're relying on everything to clear the bank before it gets into the QuickBooks system. Now, in that case, you would think that if you did everything correctly in terms of the data input, everything would reconcile because you took the information directly from the bank statement. So it's not like you're checking two sets of books because you entered them separately in the accounting system. But you are checking against data input errors. In other words, did the bank feeds enter two checks in at the same time, and now you have a duplicate, or did you not? Did something get missed? Something got deleted? Something never got processed fully through? Didn't get properly assigned? So those types of things would happen, and the bank reconciliation will help against that type of error. So ideally, if you had the full service bookkeeping system, you would like to enter your own data into the system. You write your own checks and whatnot, and then use the bank as a double check as it clears the bank, so that you have basically two sets of books that you're kind of reconciling at least the bank portion of them. But even if you're completely reliant on the bank and you're only recording things after they clear the bank, basically on a cash basis, you still want to do that reconciliation process. We'll talk more about the reconciliation process. We'll have a whole section on the bank reconciliations.